right, well, I think we're about ready to go. Appreciate everybody who's coming in here. There may not be a lot of information about me, so I appreciate everyone who's here. I know we got a live webcam going as well, so that's kind of fun. I got a lot of people back home who are probably watching this, so it's kind of exciting. I am with Simpler Trading. I've been with them for about a year now. I do see a couple of familiar faces. I got one guy up here who's actually known me for several years, and he came out from, well, you're in here in Florida anyway, so it wasn't too much of a drive. But I've been doing this for quite a long time. This is going to be kind of I got about half an hour presentation. After that, plenty of questions. We can step into live charts because I like to actually be able to talk about and show exactly what it is that I do and that it actually works and what I'm looking for. And so this is actually how I generate 10 to 200% returns trading just stocks. And this is really just kind of my methodology that I figured out over the course of time, something that just works for me. So this one today, I'll be showing you my two best setups and one key concept. Basically, this is how I was able to make the 250% trade on using just stocks. What you'll see here, actually, let me get this running real quick because I need the cursor. All right, so that should work. All right, so this is the S&P hourly. It's actually kind of recent. You guys probably recognize this pattern. But what we're looking at is what I call the inverted trampoline move. It's just kind of a name that I've coined. But basically what we're looking at right here is when you see, and this again on the hourly chart, the magenta colored line is the purple colored line. When price goes over the 50, but the indicator, the Moxie indicator, is below 0, you get this, and it's a very, very strong move to the downside. And the only reason I show this right off the bat is to say, hey, this is really consistent in the fact that you could see it again here and look at the results that have come out after that. So just a little something to say, these setups, these moves, the reliability that I've found with the indicator, my methodology is really there. Here's Tesla. So now you take that same trampoline move that I've come up with and you add it to the top side. Now we all know what Tesla has done in recent times. Now obviously it takes earnings, it takes a lot of good news to make them do it, but the original setup is still there. You can see price below the moving average and you can see that the Moxie indicator was above 0. You look at Square. Now if anybody is actually familiar with Square is right now, we've done very, very well, but you can see that it started from that same trampoline move. And this is the kind of reliability of a trade that I'm looking for. The fact that price dips below on a daily time frame, below the 50 with the indicator above 0, it shoots up. I took this at about $71. I think it was up to $78 or so in just the last couple days, if anybody's familiar with that. So a little bit about me. I fly, my dad and I are both pilots, and this has really instilled a lot of discipline in me. So as a pilot, you need to make sure that you kind of follow your checklist, your procedures, anything like that, because if you're not careful, you're going to kill yourself, you're going to kill your account, and I think that being a trader is very important in the same regard. You need to make sure that you have that discipline. And then a little bit about how my mind works, because I think that if you guys understand how my brain works, where I come from, how I designed the indicator, what I'm looking for. I was telling some friends over here earlier that one of my mentors that I learned from was kind of like the Bob Ross of painting. So if anybody you guys know, like Happy Trees and just had it kind of swoopy, and you think, okay, he's making this amazing picture right in front of us on a TV, and yet I can only draw stick figures. So that was kind of the thing that I had to take and say, I'm very mechanically oriented. This is our airplane. It was built in 1992. I was a little kid at the time, but now I'm the mechanic on this. This is actually us just a few months ago pulling the engine apart, rebuilding it, and then we put it back together, and now we're flying around. I think we have about 30 hours on the new engine. So I'm a gearhead. I'm mechanically oriented. I work with this stuff. This is my 1977 Camaro on the right that needed a little bit of tune-up for it. And so if I took this approach, try to be very mechanical and add it to the markets. This is a little something. I have an 85 Camaro race car that I race. It is actually for sale, so if any of you guys know somebody who actually wants to buy a race car, I'd really appreciate it. It's out in Austin, Texas. Anybody on the webcam, if you want to help me out with that too. But I really like to get into what it is I do. Like you can see I'm filthy dirty on the left. You know, I have to change tires and get in there, really get dirty. I take the same approach when it comes to stock trading and anything else I do. When I was a financial advisor, it was like I wanted to figure out how to make this work, how to trade, because people were doing it, and I didn't know how to do it, and I was thinking, there's got to be a way. And that's what I was set out to really do. And a little bit more about my background, going with the whole manufacturing engineering thing. I graduated from ASU Polytechnic. I have an engineering degree. I tried to look at the world kind of like that. And then I completely sidestepped because I wanted to learn a little bit more about money and how to manage money. My dad told me as a very young kid, he said, hey, you know, there are things out there that you can do that other people, you need to pay people to do. But he said when it comes to money, you should really treat it yourself. Like, who else is going to handle your money as best than you? And I always thought that was very important. So I went out there and I said, okay, let me learn a little bit more about it. And I became a financial advisor with New York Life back in Arizona for 4 years. And then from there, I actually went into stock trading. But this has always kind of given me a little bit of a laugh because exactly right here, imagine a 12-year-old kid. Now you're 24, so like half that. But 12-year-old kid sitting here with his dad, and that was me, trying to figure out, and it was actually back in Austin, Texas. He took me to a 2-day trading seminar. And I just remember being there trying to remember Fibonacci this and charts of whatever. And most of it was going over my head. But I was trying to figure out what was really going on here. And I remember talking to one of the main presenters when they were done between breaks and saying, you know, is this really possible? Do people actually make money from all these squiggles and lines and these things that you guys are drawing up here and whatever? And he's like, well, yeah, it's possible, and people do. He said, you know, we weren't born being traders. This wasn't something that we just innately know. We had to learn. It was a skill. We had to practice. We had to build it. And so he said that the fact that we weren't born knowing how to trade and that we had to learn it was really the thing that kind of stuck in my head. And I said, oh, okay, well, if you can learn it, then it can be taught, then I can learn it, then I can figure this out. And that's kind of the mentality and the inspiration that I want all you guys to understand and say that this is possible. I came from being 12, not knowing anything. I dabbled with it in college. I got back around into it when I was about 24. And then now here I am behind the podium with now something to say and a process that works for me. And so I came full circle from, you know, not knowing anything to kind of knowing something at this point. Now, does anybody actually know what the matrix is? Has anybody seen the matrix? Yeah, a little. Okay. So the whole point with this one is that when you look at the matrix, you don't know what it is because it's a bunch of computer code. And the people inside of it, they just can't see it because they're with the machines and all that. That was kind of me when I first started trading. You see a whole bunch of squiggly lines. You don't know where everything's going. You just can't make any sense of it. But the special character that was in it, Neo, after a time, he found out that he had that special power, and he could actually start deciphering what the matrix was, and he can actually start seeing the right images and whatever. And that is really what I feel that stock trading has become for me, because it was just a whole bunch of chaos. Lines, numbers, this, that. My friends call them just squiggly lines, like I'm making money from squiggly lines. But now that I've seen patterns and now that I've studied it, it really speaks to me. And these are some of the patterns that I want to be able to show you so that once you see them, you can't unsee them. And when you start figuring this stuff out, it starts to make sense and you can start reading the matrix. Now, I assume a lot of us are probably on Thinkorswim. Does anybody not know what the on-demand feature of Thinkorswim is? Okay, do you know what, so the rest of you know what on-demand is, because this was one of the things that was actually very important to me as I was coming up trying to learn how to do this, particularly since I was trying to figure out, do I day trade, do I swing trade, end of day, whatever. And I just figured out that when you look at a chart, it's kind of like a picture says 1,000 words, but when you look at a chart, you just say, oh, well, clearly I would have entered there or I would have exited here, and it just makes sense because you see the whole picture and it's just easy to pinpoint something. And you try to figure out what that is over and over and over, but the best thing to actually do is live it, to relive that moment, to say, where would I have gone in? And you can't do that without on-demand. On-demand is basically a DVR of the internet, of the stock market. And it's very different to actually live through this stuff. And even to this day, I come back on demand and I sit down and I practice. Sometimes I get in a little bit of funk and I'll go back and I will relive a whole duration of time just so I can see what it looked like in real time, because it's different to realize it in real time than it is to actually look back and say, oh, of course I would have bought it or sold it there. So I really highly recommend that anybody out there, that if you don't use the on-demand feature, it's very, very important. I can take a year's worth of trades and market movement and I can compress it into 30 minutes, an hour, 2 hours, and it's a lot of really good practice. And that was the #1 thing that really helped me accelerate my learning, because otherwise, as an end-of-day trader, I had to wait a day at a time, a month at a time, 2 months at a time for trades to set up. And by that time that happened, I forgot whatever the lesson was that I had a month ago. So now I can take this and I can compress it into a whole lot of less time, 30 minutes, half an hour, an hour, anything like that. So really recommend that you guys take a look at that, especially for your practicing. Again, going back to the pilot thing, checklist as a pilot, we want to make sure that we actually do the right procedures before we take off. We want to make sure we have rules. We need to know what it is that we are actually trading, how we're trading, what is our metric for getting in. We don't want to just throw money at the wall and hope that it sticks. We have to have that process. And then we have to have discipline, because without discipline, the first two basically go out the windows, because we're just not going to have it. Like, we have a step-by-step procedure we're going to follow, but then if we don't have the discipline to actually stick to it, we're just going to ignore all of it and just say, okay, I'm going to emotionally trade, or I'm going to throw something here and say, hopefully it works out. Going back to that checklist, do you guys actually know that the idea or the checklist actually had to be invented? It was invented in the late 1930s, when the Boeing Corporation was trying to build and develop the B-17 Flying Fortress, and a couple of test pilots that were really great test pilots killed themselves on takeoff because there was a gust lock. It kind of locks the controls for wind when they're on the ground. And the airplanes at that time had just started getting so complicated that they forgot this simple procedure to undo it, and they crashed. And what they realized is that it wasn't that humans couldn't do it or that they were getting dumb or anything like this. It was just that there were so many processes and procedures and so many things to do now in order to have a safe flight that we realized that we needed to understand what, A, B, C, or D before you can actually have that flight. And what I realized when I started trading is it's very simple, but we're just trying to go up or down. But there are a whole lot of things that kind of get in the way, that kind of catch you into that. Like, well, what if I want to go long and there's a moving average overhead? Well, okay, I didn't check about that. For example, what if there's this moving average overhead that if price runs right into it, that's going to be a problem. And so the way to kind of simplify this and make sure that I wasn't tripping myself up was that I basically took that pilot knowledge that I had, that skill and some of that discipline, and then I added it to trading. So this is one of my first, it was a trade checklist. It's basically a flow chart, but that's essentially what it is. So you guys need to make sure that you have a checklist as well. Try and figure out, well, what is the thing that keeps catching me? What do I keep running into? What is the problem that if I just stopped making this error, I would be doing a whole lot better? And you just build yourself a checklist. This is mine. It's going to be a little bit different for you. But take the errors and not only just, you have a journal for your trading, but not only just write it in your journal, but figure out, keep making the same error and add it to your checklist so that make sure that as you're going from, I think I see a trade, to I'm executing the trade, you actually have to go through these steps and make sure you don't shoot yourself in the foot, basically. So keep it simple. I'm now here at Simpler Trading. This is actually one of the screenshots of one of my mentors that I would follow. And I don't know what to make of this. I can't say too much about him because he made a lot of money and he was very wealthy, but his chart was exactly like this, and I didn't know what to do with it. I don't know how he made money with it, but you can't see where price is. I can't see what the indicators are doing. There's too much stuff. And so if this chart looks like yours, then great, if you're making money. If you aren't, then maybe we need to kind of reconsider and say, perhaps you have a little bit of analysis paralysis and you have too much on your chart. And so for me, I can trade with just one indicator. Now, I've added a couple others because I like to have a little bit more information to add more precision and to really see the whole picture. But I can essentially trade with my indicator, which is the Moxie Indicator. But I keep my charts clean. And what you'll notice coming up, I keep my price bars gray. I don't care if the price bar is green or red, and I don't want that emotional, that connection. I don't want to see green and think, okay, money, I'm going to buy, or red, oh no, I don't like this. So I keep them neutral because I really want to see the moving averages, because that's how I trade. So I want price to bounce off the moving averages or get rejected by it or follow along those moving averages. And so that's what I try and do and say I just don't really necessarily care about where price is in general. I just want to know where it is in relation to these moving averages. Now, going back to the whole pilot thing, angle of attack. I know this might seem a little simple, maybe a little pedantic, but the angle of attack is when an airplane is climbing or descending. And in this case, we want an airplane that's taken off to have a high angle of attack because you want it to get away from the ground and actually start climbing. We want the same idea when it comes to trading. And the idea behind that is that if you look here, think about a moving average. So let's talk about the 50 SMA. If the 50 SMA is just going flat, and we have a big price movement. It was great. It was 10% price movement, whatever. And it wants to come back down to support. Where's it going to come down to? It's going to come back down to that 50 SMA, that moving average. And if you look here on the left, you can see that we've had that big, good price movement up. And it eventually floated on back down to that moving average support, which is back at 0 because there's 0 angle of attack. So every time this price shoots up, it's going to fall right back down. Now, let's say we have a little bit. We have a modest incline of the moving average. You can see that on the next one. And every time that price actually shoots up, it's going to come back down here to the moving average for support, which is now a little bit higher. And then it shoots up again, let's say another 10%. Well, it wants to fade back down to support. Well, now look at that. It's a little bit higher. And so every time it comes up, it comes down a little bit higher because the angle of attack of the moving average is up. And so it can actually be a self-perpetuating thing because every time that price moves up higher, it's going to pull the moving average with it. And every time the moving average is higher, you're going to get a higher low for price the next time it goes up. So again, I know this might seem simple, whatever, but it's good to always go back to the basics because I look at stuff too. I'm like, oh, this looks like this is going to be a really good trade, and let's figure out if it's going to go. It's got a lot of potential, but is it actually climbing yet? And so you want to get into something that is already climbing, already has a steep angle of attack because it's self-perpetuating. Every time it comes back to support, that support is now higher than it was before. All right, got that right this time. So here's an example of that. Stock on the left. You look at this with this moving average, you know, this one's kind of flat, it's kind of flat too, and every time it pops up like that, it comes right back down to the moving average, and look where this thing's gone. It's basically gone nowhere, even though you've had at least 4 really good moves up, straight up, but it's always come right back down. How about the chart on the right? Maybe a little messy, but every time that it comes back to the moving average, that moving average is now higher, and therefore price is now higher and bounces off of a higher low. So these are the things that, again, bring it back to keep it simple, you know, KISS, keep it simple. We're here at Simpler Trading, trying to make things real simple and basic for you. But I think it's good as humans because we need to think about that checklist. That checklist, you should be, does this stock have a high angle of attack? Do we want to get into something like that that is just kind of being basic? Here's another good example. So this is kind of exactly what I'm talking about. We look at this and we think, oh, maybe there's a lot of potential. We talk about consolidation. We talk about stuff that has been at a basing pattern. And it's okay, great. You know, we like stuff that's been in a good basing pattern because it's got a lot of potential, a lot of energy in it. But it hasn't started yet, so we're just wasting our time down here. And it doesn't matter if we miss the first trade because look how many more trades there are. And really, you want this. You don't want to have to deal with that. And so every time it starts going, you can see that the moving average is a little bit higher. And where does it take off again? Every time it comes back above the moving average. So maybe take a look at that, bring it back to some of the trades, some of the stocks that you guys are looking at. We'll get on some live charts after this, and we'll see if we can kind of find it. I know this might be the best example, but the idea is still there, and I want to make sure that you kind of take a look at it. All right. Now, this is one of my very first strong patterns. I know that the shoe in the middle may not make it seem like it, but this is actually a scientific trading term, and I use it all the time. And I think it gives a really good visual of what to expect. And I think, again, humans, we're very visual, and what we're trying to do is decipher and add a little bit of a picture to all this craziness that is just squiggly lines and just a bunch of moving averages. So take a look at this, and it's the elf shoe. And really the concept behind the elf shoe is the double bottom. We all know the double bottom, but have we actually put it into any kind of reference? And if you look at this, the formation is really just trying to figure out the chaos that's in the market. So what you can see is the first part of it is when price starts to go down like this. You got price going down, you got the 8 below the 21, and then you have the heel. That is the first bottom. And then what we have is price then goes up. I was kind of talking about this earlier. The issue with that is it goes into the 21. So what you're looking at is this distance between the 8 and 21. It's a problem for you because the moving averages haven't crossed yet. And then you come down and you're looking for the ball of the foot. So just like a shoe, comes down, does that double bottom, and then you get that elf toe up. So how about this? Kind of fits, right? I know it's silly, but, and again, I don't know where these shoes came from. I feel like you'd get impaled if you actually tried to work with that or use it. I don't know what kind of fashion that is, but it's out there. I found it on Google. You can buy it. But look at that. You guys see kind of what I'm looking at. You got the heel, you got the arch of the foot, comes back down, you got the ball of the foot, and then boom, off goes the elf toe. Start looking around for this stuff. Start using your moving averages. See if you can see that formation with the double bottom 8 and 21, whatever kind of moving average elf shoe. Now this one, I know maybe the boot's getting a little bit sexy up in here, but if you look at this and you just cant it, you're like, oh, this really makes sense. And I start looking at this as kind of like, you know, the boot of Italy. You know, so we're starting to think about this like the continent of Italy, not country, that if you understand what the pattern is, then you know what to expect. And the whole point of this is that if you can figure out repeatable patterns and you know what that pattern is supposed to do in its entirety, then you know what portion of the pattern you're at and you won't get caught up with it. So for example, again, going back to the idea of the elf shoe and the boot pattern, if you come down here and you understand that you have this very wide 8 and 21 moving average situation and you do catch this, great. But you understand that, hey, we still got that 21, that 8 and 21 still spread, we're only in the arch, and so you'll take your money on that trade. You'll get in, you'll get out, and when it pulls back, you won't be surprised, you won't be caught off guard. And then, because you know what to expect, you're then going to just be waiting, just sitting and waiting for the next move that's coming because you know what to expect. And you're going to say, okay, I'm looking forward to come back down, test these lows, and then off it goes. And now the distance between the moving averages is much smaller, and now they can cross. Kind of going back to what we were talking about earlier, looking for that 8 and 21 cross, and off it goes. How about this? Repeatable. You guys see how it's the same pattern over and over. And this is great, because once you see this stuff, you're not going to unsee it. Because now we get that same, you know, down, and up. Now, kind of afterwards, that's different, that's an exit, but we're trying to talk about what are we looking for, trying to get in here, and it's the exact same thing. If you guys see, you know, the blue and orange line, it's over and over. And I can't make this stuff up because it's right there. And you can see the results of it. And I think that's what's pretty powerful, and what we're trying to do is just put in that picture, show you guys what it is, show you the mechanics behind it, because you got to remember, I'm an engineer. I'm trying to figure out how am I going to dissect this, how can I make this as easy as nuts and bolts and following instructions, and how am I trying to figure out a repeatable mechanical process behind all of these squiggly lines that my friends make fun of me for. Now, again, remember this chart, because these two setups right here are going to be on the next screen, but it's on the hourly chart. And now we're getting into my next most powerful trade. It's the trampoline move, which is what I covered at the, slide 2 and 3 when I first started. But those same moves that we had on the elf shoes were on the hourly time frame. They were trampoline moves. And if you remember, the trampoline move is when price goes below the 50 SMA, but the Moxie indicator stays above 0. And what that's telling us is that there's buoyancy. The Moxie indicator is basically telling us, you know, the energy level, the momentum. You know, if it's above 0, it wants to go up. And when the indicator is above 0, it should be buoyant. Price should be following these moving averages. It should be going up. But sometimes it goes down, and we look at that as like a beach ball that we're trying to actually push underwater, and we all know what happens like that. We've all been playing in water in a pool with a ball. It shoots right back up because it's lighter than water. It's exactly what happens here, and if you kind of think about these concepts, then you can start putting them together. And you look at the next one, same thing. You see how price was below the moving average, and the Moxie indicator was above 0? Trampoline move. So as I showed in the beginning of the session, we showed it to the downside with an inverse trampoline move on the SPY. I showed it with Tesla. I showed it with Square. I've showed it now 2 times, 4 times with ZIXI, with the elf shoe, and with the trampoline. And that's the whole thing about how I trade. I trade multi-dimensional. I trade multiple time frames, so I can see the whole picture. Because if I have the daily and I have the hourly chart up at the same time, I can see the interplay. I can see on the hourly chart for this one particular ticker that, oh, it looks like a trampoline move is happening. And I can see on the daily right next to each other that, hey, this also looks like the elf shoe pattern forming up. This thing's probably going to be pretty strong, and I think I know what I'm looking for, and I think I know exactly how to get into something. And more than likely, it's going to be a pretty strong move. So now that I've combined those, I'm going to go in, I'm going to make some money with it. Okay, now I just got a whole bunch of examples that I can show you. And this goes back to the process, the checklist. This goes back to the whole pilot thing. What is your checklist? And if you guys notice on the next couple of slides, my checklist doesn't change. It's going to be the same process over and over and over. What we're first looking for is that double bottom. We want to see price come down, retest that thing. It's going to basically be an elf shoe pattern. Maybe this is on an hourly chart, so maybe on the daily chart this looks a little bit cleaner as far as that double bottom elf shoe. But then we get our positive divergence. So that's the Moxie indicator telling me that internally there's a lot more pressure that's coming up in this thing, and it actually wants to go up instead of going down. Got our Moxie price trigger, which is telling us that energy is now positive. And then we got the cross. You can see our next one, cross to the 50. That's my go, no-go. So these are my 2 entries, basically 2 entries, 2-part rule when it comes to the entry. And then after that, it should follow the 50 SMA. And if it doesn't, as long as the indicator is above 0, trampoline move. So we got our setup, we got our entry, we got our second entry, and now we ride this thing. And we go until it tells us to get out, but that's a different story. How about this? Net hourly, same thing. You guys see the elf shoe right here? Here's your leg, here's your heel, here's the arch of your foot, here's the ball of your foot, elf toe. First move. You can get in right there. And you know what? I was also talking to a gentleman earlier when we were in the crowd out there. He said, I'm really aggressive. I get in this stuff, but then it kind of just goes away on me. And I said, let me ask you. You're probably buying something when price is crossing the moving average because it's proven that it can get past this resistance. He's like, yeah. I said, then let me guess. It tends to come back on you, and because you're trading short-term options, it's all vaporized, right? And he's like, yeah, pretty much. So I told him a little advice about the options, try to make that a little bit slower so he's got more time to work with this pullback. But I said, this is what's happening. The guy was buying essentially right here, and then he didn't know what happened when it came back down here. But if you had these moving averages, and if you have what I'm trying to tell you and communicate, and then you had the indicator telling you, don't worry about this pullback, in fact, it should be a buying opportunity, then you realize that that's become a trampoline move, and or it's going to bounce right off the moving average. And then I told him, I said, you just need to wait. He's like, I know, but I kind of have problems with that. I said, trust me, I was 24 too, and I get it. But he was like 64. So you just told him he needed to wait. And wait for that second entry, and you're going to make money. You're gonna do it because now you know what to expect, and that's a hell of a move after that. How about this? Just more proof. You can see on, this is OKTA hourly, same situation. Again, pattern within a pattern. We have the trampoline move because price is underneath the 50, right? So this is giving us the confidence of what we need to know. We need to understand that momentum, energy is still positive. And what we're doing is like, okay, maybe we don't want to ride this out, but we're prepared that something is happening because this is telling us it still wants to go up, and price should not be below that purple line, which is the 50 SMA. And look, now we have that double bottom, which is the elf shoe, right? So if we catch this, we understand that this is going to be that first move. We don't want to catch that because the 8 is still underneath the 21. It's the first time it's going to be running into that. We want to wait until it comes back down, does that second bottom, gets up there, and then proof is in the pudding. It just starts to shoot off after that, and then it continues to bounce off the hourly 50. Beyond that, we do it again. This one I did actually trade. We were in the group with this one. I said, we got a little caught because my stop was a little tight here because we got in here, and this went a little further than I wanted. But then I said, look, guys, I think this thing's turning around because what do we got here? So as soon as this thing took off, I said, load the boat. We're going for a ride. And there you go. It's gone up a little bit since then, but I think it had earnings, and it's actually right back at that point. So talk about a round trip, right? So I don't like earnings. And then pets. I like to show things. I kind of say that we all understand what a box is. A box is a box is a box, but they come in all different shapes and sizes. But we as human have a really good understanding and ability to look at things and say, we understand. Like, how many different chairs do we have? But we understand it's a chair. So if you're going to recognize these basic things, they come in different patterns and different formations, but we know what they are. Again, double bottom. Maybe it's a little messier, a little different. It's running into the 50, so it's got that as resistance. But look, double bottom, divergence, plus trampoline move. As soon as it crosses the 50, that's where you go. And that's the kind of thing that we're looking for. That's the rule. I got my checklist. I got my rules that I'm looking for entry. And as long as I start seeing that setup come, and then it crosses that barrier, which is the 50, and that's my go signal, then I'm in. And then I start looking for where am I going to add to it. And sometimes it's perfect, sometimes not, but start pulling, buying on pullbacks because look at this sucker. That's going to keep going. And then we get lucky sometimes. Again, earnings, I don't like to trade earnings, but I mean, it's still there. and it had a great move. And you could see, whether it be earnings or not, it took off right as price was able to get past that next moving average. So now about the Moxie stock stuff. So John Carter, you know, I work with him. I'm in the office with him. Pretty proud about that. I'm very happy, a little fanboy about it. But you know, he's got his Tesla trade. He talks about how he made $1 million or $1.2 million on a Tesla trade in like 1 or 2 days. This is my claim to fame, or at least I'm going to be making it my claim to fame. So my mom, I was trading multiple accounts, so it helped. But my mom gave me $6,000 of her money to trade when I was kind of starting to do better about this. And I thought, well, that's okay, because if I lose it, she's still my mom. She's probably going to still love me. I won't get hurt too bad. And so I thought, all right, let's go risk this on anything I want. And at the time, a lot of the cannabis stocks were kind of going crazy. Does anybody know IGC at the time? Okay, there's my point. Not a lot of people knew about this thing. It was a penny stock, basically. It was $1.67-ish when I found it. And if you look up on Google search, type in their address, it was literally a shack somewhere. I forget where it was. I don't even know if it was in America. It might have been in America because maybe they were trying to say they were an American-based company. But it was literally a shack with a door falling off of it. And we're like, these are their headquarters? I don't think so. And so a lot of money went into this. I think a lot of people lost some money. But you can see that I followed the rules. I waited until price got over the 50. I waited until my Moxie indicator went green, and then I went in. And then I promptly lost 50% or so, because that was a bad entry for me, and that was a while ago, so I was still trying to figure it out. One of my trader friends who had some money with me that I was trading his account for, he's like, what are you doing? Like, I lost 40% real quick. I said, nope, I got to stick to my rules. I think I'm okay with this. It's still good, and you can see it did actually hold this level. I said, let me just hang on to this a little bit. And again, my mom's account was like half down already at this point, but it started to come back, and you can see that the next entry I had was back when price jumped up again. The 8 was over the 21, so talk about that moat starting to work to my advantage. And then promptly the next couple days, this thing started to take off. And mind you, it's a $1.67 stock. I got in like $3.02, $2.90, and then it started to rocket up to $7.45. It's 144% gain. My rules said when you get something this far off of that moving average, you just go cash some in. So I took some off. And I said, well, let's see what the rest of this thing will do, because it seems like it's going pretty crazy. It's cannabis stock. They're the hot thing right now. Let's just go. And I think, 2 or 3 days later, it continued to shoot up to $10.90, which 257% gain. I thought, okay, this thing's just getting crazy, kind of like Tesla. Has anybody been watching Tesla for the last couple days? Yeah, and we just finally had its blow off top, I think, for a while. Same with Beyond Meat, and same with Tilray. We got to be watching out for these things. So I took off 3/4 of the position at that point and said, well, let's just see what happens after 257% gain on just a stock. And then promptly after that, I think the next day it basically imploded. I said, all right, I'm going to take the rest of it, 231%, and just let the rest go. And I think the stock right now is back down to $1 or something and trades maybe 100,000 shares per day. So, you know, a little risky, but that's what helped get my mom's account from 6,000 to 20,000, and my dad's bigger account to more bigger, but happy about that. So that's kind of my claim to fame story. They're still out there. Tesla's out there. I did actually buy Tesla when it took off like that. I didn't keep it, but the entries are there. And that's the kind of thing that I want to talk about and show people that it's around. So this is a little promo for me. If you guys want to sign up for we're calling it the Mastery Program. It's basically my subscription service. I try and talk to people about these, show them, guide them into this, do the trades. You know, you guys can follow me in. $30 or 30 days, $7. Give it a shot. Come on in. Even if you don't take any of the trades, just kind of take a look. See if you like how I talk about things. See how I analyze stuff. If you like my mechanical gearhead way of trading, to try and look at these things consistently, it's going to be simplertrading.com/try. And then if you actually just want a copy of these slides, you go to simplertrading.com/Watkins. You get this whole presentation, and then I guess that's about it. You get the presentation. Beyond that, how are we doing on time? Because they said I have a break after this, so we're kind of open afterwards, so we don't have any restrictions. You guys want to look at any kind of particular stocks or charts? Was that SLB? All right. Well, let me show you a couple things first. So going like this on the hourly chart. My preferred charts are the hourly and the daily. So those are what I will trade generally. what you'll see here on the hourly chart, price down, Moxie indicator flat. So there's your positive divergence telling you that price wants to start going up, or at least energy is telling you that it wants to start going up. Now, that first trade is when price crosses the 50, kind of like that gentleman I was talking about earlier where he's like, oh, I buy that, I buy a short-term option, whatever, it works out, and then I go right back down to zero. And he's like, now I'm negative because it's an option, and I lost theta. And I'm telling him, you need to go for the second entry, not the first entry. The second entry, now granted there were earnings, but it seems like it didn't really matter. Second entry is right here because price came down, tested the 50. You got the Moxie price trigger, which is the green arrow, which is telling us now that energy went from negative to positive. And what about that angle of attack? Angle of attack for the moving average was down, and now it's up. So what did it do? It bounced up. There's the entry. I haven't even looked at this stock. You just called it out. That's what we're looking for. Now, I think that there was a second entry coming up on this one. How about we do the same thing here? You can see price down, indicator up, telling you it wants to turn around. There's where price crosses the 50. That gentleman would have entered there, and then he'd be right back at zero right now. And now what I want to see is price going to hold the hourly 50? Now, generally, I'd step down to the 15-minute time frame to really kind of tell me if that's going to be happening. I can't tell yet because it's there. I want to see it actually hold because there is the possibility that price is going to fall through the hourly 50. But what that might do is create a trampoline move, because if price comes down here and tests those lows and goes below the 50, chances are the Moxie indicator is going to be up at zero or give me some positive divergence. Let me show you two things here on the daily chart real quick. See the elf shoe? Here's your leg, here's your heel, here's the arch of your foot, here's the ball of your foot, there's the elf toe. And then there's the trampoline move, and then bounce off the 50. All the while the Moxie indicator is above zero. So in that case, in that situation, there's your entry, there's your setup, there's your entry, there's your buy more. And then what do we have here? So this right here is this right here. You guys see that what that's looking like? Here's your leg, here's your heel, here's the arch of your foot. Right now we're looking at the ball of the foot. And what we're trying to do is figure out if this thing's going to bounce. So just like what I showed you earlier with ZIXI, is that we can see that the elf shoe on ZIXI for the presentation I showed you was the same as a trampoline move on the hourly time frame. So if we give this time, because it's developing, but if we give this time, then we know what to expect, and we'll have to see if that actually works out. But elf shoe on the daily, trampoline move on the hourly. Another ticker? Okay, Microsoft back at the time was a little bit like turmoil right here. This kind of stuff, I couldn't trade that. You can see what kept me out. So actually, the Moxie indicator for me does a very, very good job. And I think, remind me to look up CrowdStrike, because the indicator does a good job of keeping you out of a trade. And I don't know how many people actually talk about indicators and their methodology keeping you out of a trade. We're always about like, get in and trade, look how great this thing is. But how often do people actually tell you you should not be in a trade? And the Moxie indicator here tells you that you should not be in that trade. And look what it did. It just went sideways for a very long time. You can see here clearly it's below zero. You should not be in it. Then it turns around. It's got good earnings. I wait until after earnings. We got a trigger right there on the daily chart. And at least for here, again going to this, I wait till after earnings. So that's how I work. For me, I wait until price runs into the 50, into the hourly 50. And you can see the Moxie indicator is above zero. So what that's telling you is that, okay, earnings are out of the way. We don't know what's going to happen, so it bounced great. People are probably freaking out thinking that they missed something, but they didn't miss anything because, look, price just went sideways until it ran into the 50. So if you guys aren't picking up on this yet, I love the 50. I really trade the 50. That's important to me. I like stocks to respect it. If there's a stock out there that doesn't care about the 50, I don't trade it. But this is what I'm looking at because, look, I didn't miss anything. You're not late to the party. You just wait. And this is so far above zero that it's telling you that there's plenty of momentum to the upside. And then what? Another bounce right there. You can go. And then we got to, I always like to have a stop in place because you never know when crap like that's going to happen. But then you get right back in when the arrow takes off again. And then let's see if there's a little bit more. There was another trampoline move up here. Yeah, so this whole time it was able to mostly just follow right there. And then I get out before earnings. It's kind of my style. All right, now let me show you CrowdStrike. So sometimes it takes a little bit of time for this to actually come to fruition. But you see how on the hourly chart, I would not be in right now. And the reason I'm not in is because the indicator is below zero. It's telling me that it's in negative space. And so all of these pops, all these moves, they're not going anywhere. And if I could predict the future and see this goes anywhere, and I could be wrong at some point, but for now, I don't think I am wrong. At some point, price should not be over the 50 because the indicator is below zero. So now, if you guys can kind of take this image, burn it into your brain real quick, because I can actually think of another one that is doing exactly this, and it worked out. Price should not be over the 50 if the indicator is below zero. So it's telling us that we shouldn't even waste our time trying to be in this. Now look at this. TGT, target. Tell me, does this not look exactly like that? You see a price over the 50 and the indicator below zero? So if you like to go short, great. But if you want to only go long, or you think this thing is going to go long, the Moxie indicator is telling you that you are sitting on a landmine and that this is going to be a problem, because as price continues to keep going up and up and up along the 50, the indicator keeps going down and staying below zero, and it's telling you there's a problem here. So either you can go short, or the indicator is telling you you should not be in. And if you did want to go short, just like how I like to go long on these trades, the good trade is right here when price gets rejected by the hourly 50. So just like how I like to get into a trade when price bounces off the 50 and the indicator's above zero, I like to go short, or tell people to go short, or tell them how to go short, if price does just the opposite. The indicator is below zero and price comes up from underneath and hits the underside of the 50 SMA and gets rejected by it. And then you can see there's another continuation, because here price got above, right there, got above the hourly 50, and look at the Moxie indicator well below zero. So that's just where you can add more if you want to do something like that. Yeah.
This is live, right?
Yeah.
So right now your Moxie is just getting across above the zero, so would you have to necessarily wait to look to see the second entry points when they're before going in?
Yeah, so there's a first entry. Usually like you have price down, indicator up, right? So what it's telling you is if you're still short, you might want to start considering getting out, because the internal pressure is telling you this thing wants to start going up. So if you're short, start looking to get out of your short. If you're long, then maybe you can step down to the 15-minute. And if you're in the 15-minute, you could probably catch something like here. Okay, so you guys, you like to be a day trader, you could probably catch something like that for a couple days. Right now, what I'm doing is I'm waiting to see what's happening, because we've got all the right things. Price down, indicator up, we've got that divergence. We've crossed the 50, okay, so that's now out of the way. Moxie indicator is now positive by the arrows. We're positive. Now what I'm waiting to see is, does price bounce off the 50, or does it do a trampoline move underneath the 50 and come out like that beach ball? This is where my multiple time frame knowledge and magic comes in, because if you're only trading one time frame, you're not seeing the whole picture. And when I trade, I look everything from the weekly to the monthly to the 15-minute, because it's important. There may be some moving average on the weekly chart that you don't see or that you're not looking at, and price will invisibly run into it on the hourly chart, and you're like, where did this brick wall come from? And it was because there was a moving average on the weekly chart. Same thing is happening right here. Why, if we look at the hourly, why did price not just go here and bounce off that? Yeah, what's it running into? Or that, right, the elf shoe. Because so now we know what the idea of the elf shoe is. So if we understand what that concept is and we can see the full picture of what the elf shoe is, we can still see that the 8 is below the 21. Price, sure, it's bounced, but now what is this? It's probably coming into the arch of the foot. And that's why the hourly chart isn't running, because there's something else happening on the other side. So now we have to wait for price to come back down. Don't know where. It's going to do a double bottom someplace. It could be a shallow double bottom. It could be a deep double bottom. The whole point is it wants to come back down, test those lows, and bounce off, because we still have this very wide 8 and 21 situation. It's run into the arch of the foot, and we want that. And so what that's most likely going to be doing, probably in my experience that I've seen, is this probably isn't going to hold the hourly 50. I don't really see it doing that. I would prefer, because it's going to be a stronger move, because the trampoline move is exactly that. It's like you jump on a trampoline and shoot up. I would love to see this thing come back down here, because the Moxie indicator is above 0, and then we see a bounce like that. So because I know what the whole pattern is and the whole picture is going to be, then I can just wait for the trade to come to me until I see the second half of the pattern that I already know should happen. All right, so that's pretty much our time. We don't have anything afterwards, so if anybody wants to hang around and keep looking at charts, great. But for anybody who wanted to see the presentation and feel comfortable leaving, that's pretty much it. Beyond that, anything else that you guys want to kind of take a look at?